Hi, this is Amir with the single tier version of the Bulletin Board Heroes. It is Sunday, the 11th of August. Starting off with the FTSE 100, where you can see that we had that bear trap rebound from below 80.60, but there was a previous target that was hit first time. Then there was an overshoot to the downside, but we bounced above a rising 200-day line, so that gives us some hope for the future. And we've just managed to find resistance basically at the old January support line 82.20. We needed an end of day close above that in order to get us back to 8400 and recent peaks. I suppose if you are a bear, then you'd be looking to sell up to 82.20 with the stop loss just above that, looking for 80.60 again. On to the DAX, and here you can see that we've made some efforts to crawl back after bouncing, well, a bear trap rebound from below the rising 200-day line, 17,400, then bouncing on that line for Wednesday and Thursday, and then back now to hopefully get back up to the previous support area around 18,000 and maybe filling that gap from the beginning of the month as well. So that's the target for this market. What we don't want to see is an end-of-day close now back below the 200-day moving average at 17,500. Dow is next, and here the picture, one of recovery in terms of getting back above the 50-day moving average. The blue line there, that's actually rising now, and that's running around 39,500. So we're just near that area now. Want to see further progress above the 50-day line and also the old gap top there, just around 39,400. If we can do that, then looking for hopefully a retest of the best levels, record levels, towards 41,200 by the end of this month. What we don't want to see is any end-of-day close back below that uptrend line there from back in April, 38,500. Next up is Bitcoin, and here you can see that we've got a situation which is also recovery mode after the rug pull that we had the turn of last week. Situation now is that we're almost the same. It's almost the same as the FTSE actually, just near the 50-day moving average there, 61,800. Actually, the 200-day line here in this case. But want to see an end-of-day close back above the 50 and 200-day lines there, basically 62,000 plus, to get us a chance of heading back to 70,000, where we failed several times since the March peak. On the downside, there is some support there from the old uptrend line, 58,600, and then below that, the July support, 54,000, but ideally we stay above that 58,000 zone and head higher. Stalling below RSI 50 at 48, so that is a slight negative and does suggest that there's an opportunity for bears to be going short at this zone. Moving on to gold, and gold being the best of the bunch really in terms of the major markets we look at. We've already highlighted the 4 bounces off RSI 50, so very rarely see that. It's a very, very strong signal and does suggest that we have enough gas in the tank to head up to 2,600 and the top of that rising trend channel from back in December. Downside hopefully at the moment limited to 2390, the 50-day line and the floor of that rising trend channel. Moving on to the stocks, and actually starting off with a blue chip and starting off with a negative situation. In fact, we've got a bull trap island reversal, so gapping up to higher highs above £1.37, multiple top there in the low 140s, and then gapping down at the end of last week. The view at the moment is that while we're below the top of that gap there at £1.34, there's a risk of a move back down to the 200-day line and the top of the May gap at £1.20, so that's a negative setup. Don't normally do those, but as it's BT, maybe we could make an exception. On to Clontarf, and here, just rejigging the chart, we had various targets, and they were hit during June and July, but the current situation is that we've had 3 support points there above the 50-day moving average in the recent past over the last couple of weeks. That is a continuation signal in its own right. We're missing the RSI being back above neutral 50, but while we're above the 50-day line there at 007, looking for a retest of the best levels of last month as high as 0.14 by the end of next month. There is a resistance line there from last month, and maybe some traders would be waiting for that to break and end of day close above that before pressing the button on a possible move to the upside. Moving on to Deliveroo, again, not quite the type of stock we normally look at, but the excitement here that we managed to, on Thursday, have an unfilled gap to the upside, pushed through previous resistance of £1.40, and we're heading towards the top of that rising trend channel from back in October at £1.60, which we're looking for hopefully during the course of August. But what is the big prize here, maybe an unlikely one, is that if we can get through £1.60, we've got the upper parallel of that rising trend channel from September last year heading towards £1.90. Not sure what would do that, but we've now got the 50 and 200 day lines both rising as well. Bear trap gap reversal, so a lot of things that we like as far as charting setups on that chart of Deliveroo. The obvious stop loss is just below £1.40, the old resistance. On to Destiny Pharma, and here the situation, one of ongoing recovery or recovery attempt. We've got that broadening triangle base. We had bullish divergence in the RSI window, and interesting, on Friday we had a key reversal to the upside, so lower low initially and then closing above the previous day's high. The view at the moment is the longer we stay above 3.5p, the greater the chance of filling that gap up to 8p, and maybe that'll happen by the end of next month. Moving on to EQTEC, and here, stock which has certainly been in the wars, but hopefully from a technical perspective, one can see that the shares are trying to snap that negativity. We had a decent close at the end of the last week on Friday, marginally at new near-term highs, or at least the last sort of month or so, and the longer the shares can stay above the 1.3 zone, the greater the chance of a move through to retest May resistance as high as 2p plus by the end of next month. Quite a punchy call there, but if we can get that 50-day line rising, we are justified in regarding this as a bear trap rebound. On to Getech, and here we've had a gap higher, unfilled gap off the low for the shares, and what's interesting here is that the old low there was around 1.9p. Above that, we're looking for a minimum 3.1p, which is the top of that falling trend channel from back in June, and we're looking for that maybe as soon as the end of this month. But the bullish divergence and that unfilled gap off the low, strong signals on Getech. Haven't covered global petroleum for a long time, and here you can see probably why we haven't covered it for a long time. Shares have a nasty habit of spiking and then falling after just a few days, as they did back in May. But hopefully this time it's different. We've closed above recent neckline resistance just under 0.07, and the longer we stay above the 50-day line, 0.06, the greater the chance of a long overdue spike to the upside through towards 0.13 or 0.14 at the top of that broadening triangle from back in May. Onto a stock which one of those didn't really want to cover again, but looks like it's back after the horrors of last month. Here we've got a potential U-shaped turnaround. Probably wouldn't risk more than below 0.03 there. That was resistance on the way down. And guessing, and this is a big guess here, that if there was a rebound, it would partially fill the gap down that we had. So maybe 40% of that gap, and that would take us to 0.05 or 0.055. But that is the best case scenario on offer at the moment. I think the other point to note is that we gapped off. We had a gap higher on Friday. And if you take that with the gap down that we had back in July, then that is a bear trap island reversal, and that is a strong setup. So that's why looking for a rally there while we're above 0.03. Moving along to perhaps a less fraught situation, which is Physiomics, and here another stock trying to make a base, and it looks like a rising trend channel base. Nice to see the close there above the uptrend line there from last month, around 0.7p. Above that, looking for a best case scenario for the shares to fill the gap up towards 1.2p, maybe by the end of next month, but that is certainly a best case scenario. The most likely scenario probably is just to head up to the 50-day line, 0.94, but even that would be quite acceptable at the moment while we're above 0.7p. First look at the chart of Rome Resources, and here, after a little jiggery-pokery, when the stock came to market, we've had a clear rebound from just below the 50 and 200-day moving averages. I like that little bear trap below the initial range there at 0.27, and the longer we stay above 0.27 on an end-of-day close basis, the greater the chance of a move to that September resistance line projection as high as 0.46, and we're looking for that as soon as the end of next month. But as I said, the key here, holding above 0.27 and the 50 and 200 day lines. On to Shield, which has been a winner here, obviously been weighed down by adulation on that call, but the initial target here was 3 pence. The next target there, where we closed basically at 4 pence last week, and the next target here up to the old support zone post-October support there, and that went up to February at 6 pence. So basically above the 200-day line at 3 3/4, looking for 6 pence on Shield. Stock which I didn't want to chart at all, but too difficult to resist, especially the difficult ones, which this certainly is at the moment. Sondrel, here we've got a potential U-shaped turnaround. The shares did spike quite nicely intraday on Friday, but they've come back to rest on the old support there from last month, the old support around 2.5 pence. So really want to see the shares remain above 2.5 pence on an end-of-day close basis. There's a gap to fill there up to 3 3/4 pence, but it looks as though that might be something of a challenge. On to the last two. The first one, the rather obscure one, World Chess, and here this V-shaped rebound, Golden Cross, which we had at the end of last month, so backing the idea that this is actually a mid-move consolidation before a move up to as high as 27 pence. And as we said, the mid-move consolidation setup has worked rather well in the recent past. Obviously, we want to stay above the recent support there at 12 pence. Ideally, we don't even go back below Friday's support there at 14 pence on an end-of-day close basis. Finishing off with Wildcat, a stock I mentioned in the weak and small caps, and here's still the chance of a rising trend channel base. Obviously, the initial target here would be the 200-day moving average at 0.2 pence, but we are maybe overdue a spike to the upside. We've had quite a few of those basically in the autumn and then going to the spring, and guessing that with the 200-day line rising, we might get a move towards 0.3 pence over the course of the rest of August. No price action wanted really below 0.159. Hopefully we won't get that. That's it for me today. More updates during the week.